Hi, Richard Little, your land partner. Today I want to talk about trading and why we choose to trade as developers rather than to hold. So traditionally in our family and our business, we've been traders. We traded since the 50s. So pretty much everything that was built by ourselves, with partners, joint ventures you call it now, but we just all used to call it partnership, was sold. Now, some of those units didn't sell straight away. In sort of when the market takes a bit of a downturn, or there was perhaps more supply than there was demand, then those units, I think the longest we ever held onto units, I believe from memory, was about 15, 16 months. We chose to keep them empty rather than put a tenant in, which I know some developers do. If they're not going to sell them, they'll tenant them sooner rather than later. But at the time, and to a degree, don't disagree with it now, the premium that you get for new builds is lost as soon as you tenant it. So it makes sense, as long as your borrowings aren't too heavy, to keep them empty. So that's a bit of an insight into a trader's mindset, I guess. Is traders, and most developers are traders and continue still to be traders. Is the fact that yes, it's an asset that needs to be sold. So why are we doing that? Well, we're doing it to actually crystallise the profit, and get what is seen by some as large sums of money. So one of the reasons we trade is to get large sums of money. Other benefits of that is, once you've moved on from a project, you can concentrate on to other projects. So I think there's seen, and I think it exists, is a developer who trades, that has a different mindset and has different processes and a different business setup than one that invests and holds. So it is two completely different businesses. What we're now seeing is, and ourselves included, is much more of a merge of those two business sort of differences, and actually starting out right from day one is we're building to hold. But going back to trading is other than, so the first reason is to crystallize a profit, in order to reinvest that profit into the other projects, so we are more liquid. We actually have more of our own capital, so we're not so dependent on borrowing from others. Whereas if you very quickly compare it to a build to rent, a build to hold strategy, in theory, if your profit margin is high enough, then it may be that you end up that you have got pulled no profit out, but equally you haven't had to put any money in, but you haven't created any money, any lumps of money. So what do you live on? How do you fund the next deal? Well, that's okay. What tends to happen is people have got investors or people they work with, but developers on their own can, if they're not looking to scale particularly big, they can be self-sufficient. They build up a pot of money, they buy a plot of land, they build a few houses, they sell them, they might borrow a bit of money from a development funder, but they've got no equity investors, so you haven't got other people perhaps with a say in what you should and shouldn't do. So there's another potential benefit there. I'm not saying it is absolutely a benefit, but there is a potential benefit there. You can be more self-sufficient. You can, as long as you're providing, you're prepared to build your business perhaps a little slower and a bit more steady, but we do maintain that property is about building wealth slowly and not quickly anyway. So we've got the profits, we've got crystallising the profits, so lump sums of money, crystallising the profits, the ability to roll that money into other deals, making you self-sufficient as a business. They have to be attractions. Whether that appeals to everybody, as I say, there's a bit of a mindset thing here. For us, it's historical. It's almost like we didn't know anything different. So now we're moving over into larger scale holding on some projects. We're having to change. We're having to learn from other people. What are some of the sort of the 10-20% we don't know about holding property? What is that? We're fortunate enough to be connected with people that hold a lot of property and been doing it a long time. So we get our soundings from those people. So in respect of other benefits of building to sell, there aren't really very many, if I'm being honest. And I'll add here now is most of the profits that we've ever made are due to the market. Now, I am underselling myself just a little bit, but just allow me that for a moment or two, is that most of the bigger profits, shall we say, are made out of a rising market, not because we're great developers. It's timing. And is there some of that good luck? Most of it, if we're being frank, because nobody can predict the market, as we've previously discussed. And if you have developed yourself and you've built a few units and you've come out and you've made 100,000, 1 million, 5 million or whatever, fair play, But to do it over a long period is very difficult. So moving on to the problems of being a developer is it takes a long time to go from beginning to end of a project. Now, if you are planning from day one to actually hold those, everything is different moving forward. Perhaps the design might be different, the specifications certainly likely to be different, and you move forward for that, and you get refinanced and you move on. The expectation isn't there ever to pull out large amounts of money. So from day one, it's about managing the process all the way through. But as a developer looking to sell, we very much have to be aware of the markets, what's actually happening, the times of the marketing, the times of, when are the property's going to be ready, what's the market likely to be doing then. So to the extent there's a lot more pressure on adopting a build to sell strategy. However, I guess that for many people, being a developer is about creating those large sums of money, and maybe for some people the attraction is the Range Rover and the holidays and the villas and all that sort of stuff, and it's very difficult to do that quickly if you are working on a build to hold basis. So if you want that extremely attractive lifestyle, to be fair, I'm not overly sure it exists that often, then the build to hold. But because you are taking on market conditions and you are taking on, things way outside of your control, that's why a lot of it's down to luck. So, if you start, if you source some land and you get planning and you start building, and then 2 years later you're in the middle of perhaps marketing, then that's fine. But what happens? What's the problem if in that 2 years' time the country, the economy is perhaps dipped a little? It's great if it's rising, and that's where I'm saying it's down to luck. It's not about forecasting. If our country comes out of a recession, and it is starting to climb, then you sort of think, I've got a bit of time here to actually get in and get out. So that's sort of about the only time you really know is when something's coming out of a dip, and a big dip and a recession. Once things start improving, then you might have a bit of time before perhaps the next dip or the next struggle. So people that are in the cycle at the right time, then absolutely, and people that have been in development for many cycles, then they know how the cycles work, so they will get in at the right time and they will get out before the peak. Now, they get out generally well before the peak because they don't want to be at risk if you've got a lot of units when something happens, when the peak in the market, when demand starts to fall, money gets tighter, confidence is gone, etc., etc. So if you are a developer that is keen on the build to sell, don't expect to be developing year in and year out. If you are, you need another exit strategy to actually back that up, and that's why after many decades we are now building to hold as well. Building to sell and building to hold. It allows us to be building homes year in, year out. For really almost forever. There's odd little things that will still pause us probably, but so developers that go from one project to another without an eye of changes in the economy are just eventually going to lose some money. So they might make some money and then they'll lose some money. And I know this because we did it. That's what happened to us in a good few years ago in the late 70s and all through the 80s and into the 90s. Excuse me. So some of the things against trading, I've already pretty much said. It's the opposite, if you like, to what I've just said. So against trading is taking on the market, taking on the cycle. So why would you? Well, why do developers still develop to sell? I don't know. Is the honest answer. As I say, for us, it's in the blood, and it's a real big dilemma for us to actually move to actually, or me personally, not for us as a business and a family business, because most of the drive for this is coming from the others, not from me. I'm still, and I probably will die as a trader and preferring to crystallise the money. But actually, a lot of what I personally do at the moment is more for the legacy. So I have to really listen to the people that are going to be the beneficiaries of the legacy. I don't want to leave them with something that they don't want. That's one thing that we'll talk about when we talk about build to hold, build to rent, etc. So if you are looking build to market, build to sell, then okay, what are some of the things that we should be thinking about? So how can we achieve early sales, for instance? I know people talk about off-plan sales. Some of the issues that actually throws up, and they're not good and all this sort of stuff. But actually, we've always done this. We've encouraged early sales. Now, we don't do it or haven't done it in the way that the market seems to sort of understand, I suppose. So we've looked for early interest on every development we do. We always look for early interest, and amongst that interest, what we're really looking for is, has anybody actually got money that they've got now that they'd actually like to buy, purchase an option potentially on a property or a number of properties at a certain price that will be completed on a later date. So that's one way of attracting investment to developers for development. So that brings cash in relatively early. So we look for early sales. I mean, if you're looking for early sales to the market, you don't want to launch a scheme too soon. So schemes that are launched too soon, okay, there's a reason for that. Sometimes it is to test the market, sometimes on the pricing strategy. But so we are going to look at, as traders, we're going to look for early sales. We're looking for money. It's all about cash flow. So one of the disadvantages again is lack of cash flow. The money comes in chunks, but you wait a long time for it. So it's money out, money out, money out, money out, money out, and then a bit of money in, or perhaps a little bit more money in. But when that money comes in, all of a sudden, you can get to a point where actually, we've paid off all the finance, and actually this money coming in now is, that's the money. You see the profit, and there's something about seeing money, even if it's on a screen now rather than a statement like we used to get through the post. It's real. it becomes much more real. So again, I think that's that feeds the hunger and the desire we have as traders. Whether people that sell a I don't know, a pack of socks or whatever, and they receive their £2, it's a transaction, it's complete. So that's the thing about trading, it's complete, it's ended. There is no long-term responsibility. But other things that we look at from a trading perspective is can we actually produce something that is desirable? So where can we, if we're going to trade, where can we increase our margins? So we're looking very much at the end buyer, the end user. Now, for new build properties, the numbers used to be, they're probably changing a little bit now, that 50% of all the new build properties, not just us, but across the countries, go to investors anyway. And 50% of those investors used to be cash buyers. They're the people you're looking for the early sales, just to sort of go back to what I said before. So what you're looking at is a combination here, because you want to attract the investor who's looking for something that will rent out, which doesn't necessarily have to be quite the same as something that you're selling. So when you're looking at what your offering is, who do you pitch it to? So what we generally get is a pitch that sort of neither meets either requirements. So from an investor's point of view, a lot of the finishing, a lot of the materials used probably don't have that long-term, that long-term sort of durability, if you like, that they actually want. So it doesn't quite meet the investor's thing. So they end up as not overly happy, but and for the purchaser, they're not always quite happy either, because they're more focused on how big the rooms are, and it's very easy to go into a showroom and get excited and all that sort of thing. But overall, I think it'd be fair to say that a lot of consumers, customers of new build properties are probably not that happy with the product. So to differentiate yourself between perhaps a volume builder, you'll know the names, a volume builder and yourself, or ourselves as a small, medium sort of size developer, is our product of a better quality? Well, actually, it needs to be of a better quality anyway, but actually the better quality can come at a cost. So there's this balance to be made from a build to sell, is actually, right, okay, we want to make a profit, so we want to sell. We want to sell at a premium, so we may have to offer a few things more potentially that the volume guys don't do. And the biggest thing is the quality, but actually making sure you sell the quality to the end user. So really it's considering the product. So it's really something, if you're doing build to sell, it's the product. The biggest thing about the whole thing is marketing, which is going to be discussed on another occasion. But what is it that we're actually producing? What is it? Is it fit for purpose, firstly, but actually, is it attractive to enough people? Because we need to attract people to our product, our properties, our houses, and as I say, that's either investors or it's actually people to live in. So one of the things we have to look at is our product. Absolutely got to be, lots of people talk about they want to produce a superior product and they want to do this and they want to do that, and lots of people believe they produce a superior product. What they actually produce generally is the norm, and they might market it as a superior product, but when it comes down to it, it's the same or very, very similar. So they might sell it in a slightly different way, and maybe that's the difference. But the actual product itself often isn't that much different. So from a trading strategy, you've got to look after your end purchaser, because they're absolutely key. So the other thing that you've got to make sure is that you've got the right people to push the sales through the process. So when you actually get the people that are going to be doing the agents, so you've got agents doing part of the marketing for you, and then you've got, once we get some sales, we've got to make sure that the agents are actually pushing those through or converting the leads to sales. And then you've got the legal process, and you're signed up to Help to Buy and any scheme that is actually current and is of value to you, giving you the edge. Can we actually, can we get more people to come and look at our properties, and then convert them into sales? So you've got to make sure you've got the right people that are doing that. And what we find is that the very, very best people to sell your properties effectively are you. Doesn't mean to say you're going to be front of house doing it, but take an interest in the whole process. So when you are a developer, this applies whether it's build to sell or build to hold, take an interest all the way through until it comes out the other end. Do not rely completely on people that haven't got the same interest in as you or your core team. You can't do it all yourself. You've got to have core team. You have to trust people. You have to allow those people to grow as well, which allows you to grow as a company. So when we're selling the thing, and I have to say this is lets a lot of people down in my view, is they lose interest. Once the house is virtually complete, they lose interest, and you can't do that, because until that money is in the bank, until that profit, if you like, is crystallised, you haven't made anything. You haven't done anything. So many people move on to the next development or another development. They got 4 or 5 on their desks, and actually they're leaving the most important part at this stage is bringing the money in. So they're leaving it to other people that they often say, oh, the agents weren't any good, the conveyancers weren't any good, blah blah blah, because it took this and it took that. So from a build to sell strategy, you've got to be prepared to see it all the way through, because that's absolutely key. So really, to sort of, just to sort of go back and sort of pick 2 or 3 important things from a build to sell, is we've got to absolutely be certain that we're building the right product and there is a demand for it. There has to be a demand. If you've got a lot of competition for what you are actually doing, building an apartment or building a house, whatever size it is, whatever style it is, what is your competition doing? Understand what your competition do. Understand how much competition there is. Understand how big the market is, and actually, is there a lot of other people that you're about to go on site? Do you know every other project that might be coming on site? So it's actually going to enter that market at the same time. It doesn't matter quite so much if you're holding and you're renting out. You obviously need to understand the rental market there, but certainly on the buy to sell, because on a buy to sell strategy, on a buy to sell sort of preference is, well, actually, if we don't sell, what we're going to do? That's when we run into potential issues. So we need to understand our product. We need to understand the end user. We need to understand what the demand is, but we have to make sure that we push that process all the way through. We push it. We're managing it. We're controlling it. We're working as a team. We've got our core team involved all the way through to the end and beyond the end, because the end isn't when the money comes in. Because what you've got to do, you've got a responsibility for that property. Whoever you've sold it to, you've got a responsibility. And you may well be able to offset some of that responsibility to your contractors, your subcontractors, etc. But the after-sales service is so important in our industry, and often neglected. And it's the one that gets the bad press, sometimes fairly, sometimes absolutely unfairly, as with a lot of stuff in the press. But you need to be on it. And when somebody rings you up and there's a major problem, then you get somebody round within, minutes if it's a real problem, and certainly hours, and days if it's a lesser a problem. And you will also get buyers that some moan more than others. And some need more attention than others, and you have to give them the attention. So you might have crystallised the money, but the profits isn't crystallised until you've perhaps about, in some cases, 2 years on, when you've got responsibilities with the warranty providers and they completely take over. So you've still got ongoing. So those large sums of money that you've hopefully created, it's a case of, well, actually, yeah, I need to put some aside because I need customer service. I need to make sure, because maybe some of you that want to build a scalable business, you're building a scalable business, etc., and you're going to go again, is, a bad reputation spreads very, very, very quickly. Yeah. So other things that you need to think about when we were talking about looking who your end your end buyers are going to be is, well, actually, do we want quick sales? Can we look at selling quite a few units? And this is one of the real benefits here of working on schemes that attract affordable housing, because those units, you should be pre-selling them before you build them, before a spade goes in the ground. You should be working with registered providers, the housing associations, etc., even as early as the planning and the design stages, to make sure that you're going to give them what they want. Because one of the biggest eaters into your turnover and your profit is affordable housing. Equally, on the flip side of that, one of the benefits of a project is affordable housing and cash flow. And I guess a lot of people probably don't really think about that. We know a lot of developers that stick below the affordable thresholds in different areas, and I understand why they do, but believe me, there's a lot of money to be made in all times out of affordable housing. Yeah, across the decades, affordable housing is your go-to. It's your one that is going to be there, and if you know how to operate in that sector, then, and the intricacies and who to deal with, then that's where you'll be protecting and building on your margin of profitability over the whole development. You can't just concentrate on the homes that you are delivering for sale. You need to concentrate on the homes all the way through. But actually, your first bits of cash on pretty much most development will come from your affordable housing. And that enables you to actually put a much better proposal together for funding and for equity investment. If you understand that part of it, then that's key. So if you are going to adopt a build to sell, then look at all of your customers. Yeah. So yeah, there are all sorts of things that other things that we consider as developers to sell, and having a wider idea of what's coming up. So right from day one, your scheme design can reflect what people might want, and to that we keep a close eye on what the competitors are doing. Certainly the volume guys, what are they doing? You go and look at any development in the area where you're perhaps developing or thinking to develop. How are their show homes working? What do they look like? What's their scheme designs? Have a little bit of a look on the planning portal if they're not on site yet. So have a really good understanding of what else is around. So in terms of being different, then you have to be careful there. So what we would look at is, depending on where we're developing, we might look at, if we're developing in more rural areas, then what they're doing on apartments in the middle of London or whatever doesn't really make that much difference. A little bit, but not a lot. So you're not going to be copying that. So don't always look at something in another area and think, right, I'll bring it to where I am because it's going to be brilliant. You need to be working with your agents, the people that are on the ground, that know what the buyers want, what they're looking for. So absolutely key. Estate agents get a lot of bad press. They are part of and need to be part of your core team, because they are, if you're into your football and a football analogy, they're the strikers. They're the ones that are going to bring it home. They're the ones, the difference between the winning and the losing. So yeah, as ever, we could talk for hours about the any point really. But in conclusion, developing to sell is great. So it's in my blood, in my DNA, and I will continue to look at that as a preference. But you've got to look at what it is you're selling. Don't be looking to do the sexy projects where the penthouses are £2 million and all that sort of stuff. It's lovely and it's great and all that sort of thing, but generally the risk of those is just so much. If you want to be successful as a developer, by all means be a little bit different, but don't put yourself out there at the luxury end unless, of course, you've also got a good balance at the affordable and the family home, all the different types. If you are out there as a luxury developer, you will get caught with your pants down at some point if that is all you do. Now, I know people like to do fantastic quality and everything else, but what I would say is actually whatever it is you're building, build it to the best of your ability, the best available and affordable technology and processes, etc. Just make sure that the job is a good job and it's long lasting, and people will appreciate it. Your customers will appreciate it. So if you want to go out there and make big bucks in chunks, then yeah, big bucks are available, but they're not quick. Yeah, and if you're really, really smart, and I'm now smart after 43 years or whatever, only because other people are telling me I weren't smart, so now I'm getting smarter because I'm following them, is adopt a much more spread your risks across a bit of develop to sell, a bit of develop to hold, and in there some of that sell is to affordables. And if you do that, then you should be able to ride most economic sort of situations. Most, not necessarily all, but most. So don't overcommit in any area. If you're going to commit in one area and one area alone, stick to affordables, because that's safe. That's safe and sound, and sell them to the end buyers. So I'm hoping that's of some help, and we'll speak to you again soon.